In today's interest rate markets, let's take a look at the 10-year note futures as they're realizing a nice move higher today. We're seeing them up sharply on the session, clearing the 131 handle. 131.12 is the current level for the futures market, and that's the highest level in 2 months. You have to go back to October 4th, to see the 10-year note futures trading at this level. So we continue to see upside momentum in the back end of the curve as the treasury markets continue to realize some strength. And I think there's a couple factors why we're seeing that play out on the back end of the curve, specifically when you look through the 10s, the 20s, and the 30s. And number one was the unemployment report this morning. The non-farm payrolls number came in less than half of what the expected increase was forecasted for. I think 550 is what they were looking for, 550,000 non-farm payroll increase, and we got 210. And so with that disappointing job creation number, even though the percentage rate, the unemployment rate actually went down, the job creation number seemed to be the bigger factor here, and we did see quite a reaction in the treasury markets, increasing the bid, as I mentioned, in the back end of the curve and pushing the 10-year note futures higher. Also, the rotation that's taking place today with this data point coming out and some of the other factors, the Omicron impact as well, and just the general kind of economic growth prospects moving forward. At least the sentiment in the market right now is such that we're seeing, again, equities selling off quite significantly today, and therefore a rotation into the treasury markets as we're seeing a rotation out of equities and into fixed income. So I think that's helping to support the 10-year note futures as well. Now, looking at the yields, we are looking at the yields dropping significantly today, down 10 basis points to 135 basis points for the 10-year yield, down from 145. We're looking at the 30 years pushing lower as well. As you move up on the curve, it flattens out a little bit when you get to the 2 years and shorter dated exposure. But once again, that yield curve continues to flatten here throughout the week and has been flattening for the better part of the last several weeks as we see the impact of some of the shifting dynamics, particularly the Fed indicating they may increase the liquidity provisions or decrease the liquidity provisions, increase the tapering, I should say. Couple that with, again, as I mentioned, the equity market's coming under some selling pressure, and therefore we're seeing a nice bid coming into the 10-year note futures, pushing them to 2-month highs.